In the end, Bitcoin did pretty well. Based on our on-chain data, I think it's still in the bull market. You can say the same thing about the stock markets now too. A lot of buyers lost money during the tariff chaos. I really enjoy bull markets like this one, where the stock market is rising as we climb a wall of fear. It's great that this time around, the market hasn't been an unhealthy bull market like it was from 23 to 24. The market is now spreading out. The things Cathie just said are very true. The market isn't just getting bigger. These days, people are focusing more and more on projects that are really useful in the real world, whether it's through tokenization, real world assets, or just financial tools that make people's lives better. More and more people are also paying attention to this blockchain hash graph type technology because they know it will change the way the world works. And a huge amount of very smart money is pouring into crypto at a rate that has never been seen before, especially into certain projects like XRP and HBAR right now. Lots of what Cathie Wood is going to talk about in today's video is a big part of the reason for that. So that's why I'm giving you this brand new update from Cathie Wood, in which she talks about the big market reset and what the future of blockchain and cryptocurrency is likely to be like. I think things are going to look really good for XRP based on this information. You probably already guessed that. I'm really excited about what the future holds here. Yes, hit the like button so that the whole XRP army can see this. Now let's get to it. We think we'll be able to get out of this rolling slump once we know more about tariffs, the tax package, and the big beautiful bill. We think that the recovery will pick up speed as we move from this year to next, with productivity, which was a big surprise, and real GDP growth both improving. The other surprise, we think, is that inflation will be much lower than we thought it would be because of how productive people are. A lot of people think that higher inflation means higher real GDP growth. The more growth there is, the more inflation there is. Based on past, that's not true at all. The output goes up as the growth rate goes up, and efficiency is a strong way to fight inflation. And we think that will happen again, maybe even more than before, because of all the deflationary forces at work and the huge growth of new technologies, especially AI, which is, as we've already said, a very deflationary force for the better. The more prices and costs go down, the more units are sold. That's how recessions end, or in this case, a rolling recession does end. And we don't think this time will be any different, except that it will be bigger than usual. We believe that things are changing now. We also think that the shocks might be on the low side of what people thought would happen, which would mean that the deficit would shrink as a share of GDP more than people thought it would. You can see what I said about M2 here. M2 is getting close to 5% growth. That's what this purple line shows. Look at this map to see how rates have changed over time. Even that rate is lower than what we've seen in the past. Another interesting thing about this picture is that it shows that M2 growth was faster than inflation in the 1960s and 1970s, was able to handle all kinds of government spending. You can see that this has moved up by 18 months. If we're right, the rate of inflation will go down. And there's a lot of disagreement. I think Treasury Secretary Besant has been trying to make sure that we don't end up in another accommodative time like the one in the 1970s, which caused terrible inflation of double digits. Things will be a lot more like they were in the 1990s if we're right. Money growth will be higher than inflation, and inflation will actually be going down. That will mean that money is moving less quickly. As for the velocity of money, I know I've shown it on charts before, but it's been going down since the secular fall. The growth rate had been slowing down for a while, but it really started going down in the late 1990s, with only a few short-term ups and downs. We just got over the cycle bump, and now the speed is beginning to slow down again. That trend is important because of this. If it's still in place, money growth at this rate is not a problem in terms of making inflation worse. This number shows how fast money changes hands. And why would it go down? If we're right and inflation is much lower than predicted, then interest rates will follow. This means that people don't feel like they need to buy anything right away because both inflation and interest rates are going down. There will be more than 1 billion active users in the crypto space by the end of this year if the current trend of people adopting crypto continues. Please give that some thought. A little less than 1% of people in the world have any XRP at all, not even 1%. So picture what will happen when all of a sudden 15% or more of the world's people are in the crypto area. Think about how many of those people will buy XRP. The numbers are so big that you can't even begin to understand the scale of magnitude we're talking about. Numbers that big are hard for everyone to understand. My prediction, though, is that XRP will be one of the best drivers because of this huge growth spurt. Now, what's the reason for that? The first reason is that it's set up to be a tool that everyone can use. But very rarely in human history have tools worked so well that they didn't really help people in the real world. To be exact, there are a few cases. Gold is expensive because it is a store of value. So this isn't really a good use case for it. Yes, it can be used to make computer chips and other similar things, but it's probably one of the few things that everyone agrees is a good way to save money when times are volatile. We should really look at the cryptocurrencies that solve real-world problems and add value to society. Bitcoin might still fit into that category. XRP is great. The H bar is also great. And I think those ones will do amazingly well compared to the rest of the market, especially since this grow curve is so steep. What else does Cathie Wood have to say? I believe many of you haven't heard it before. Let me play that quickly, and then I'll make what I think is the most important announcement of the day near the end of the video. So make sure you stay tuned for that too. Let's talk about that. We've been going up a wall of worry. A lot of people thought that the tariffs and the fight between the Fed and the president would really shake up the markets. And there has been some change, of course. But I think these are the types of bull markets that last the longest. It's really telling us something when the market goes up despite all the problems. I think it's telling us that interest rates are likely to go down. And I think the housing numbers are something that a lot of people aren't paying attention to when they look at the inflation numbers. They get in there after a long delay. We think that the market is moving from focusing on just a few stocks, which was a very bad sign during the bull market, to becoming more spread out. Also, I believe that lowering rules is one of the most important things that this government is doing. This idea that we've been in a rolling slump has been pretty stable. When interest rates went up in 2022, the housing market crashed, and it hasn't recovered since. In fact, it's kind of going down again right now. The manufacturing sector has not come back. Hence, we do think that they will get better as interest rates fall, rules are eased, and people are sure that taxes will be cut, among other things. Things that happen like the instant depreciation of capital goods, which, to be clear, I think most of these issues will be solved before the end of the year, and I think rates will be lowered sometime in the next couple of months. I can't wait. When it comes to rate cuts, the US is really behind the rest of the world, but finally the political pressure will be too much for the Fed to avoid making a mistake. To be honest, they can only put things off for so long. That being said, I have been killing it when it comes to dealing futures during all of this news. I have proof of everything in my Discord and Telegram channels, which are where I post all of my deals. 20% on this new one right here. This one is also 10%, and this one is 18%. Every single month, we close a number of trades. There are 11% right there, 8% right there. We're also making a lot of money, 50% of the way here. You know, we do this all the time, and I'm posting all of these trades, every entry, every exit, and my whole thought process on the market outside of my Discord server. If you want to see my futures deals as soon as I make them, you can. In the past few months, I've made $40,400, 0 cents on my trades.